Morena, good morning. Welcome to this Westpac Smarts webinar, Business Basics, Turning to Your Bank for Support. I'm Matthew Gill, Westpac Business Bank Area Manager for the Lower North Island, and today I'm joined by two of my Westpac colleagues, and together we will cover and acknowledge that many of our customers are experiencing tougher times. We've had several one-off events, COVID, economic, and potentially environmental. In fact, I saw firsthand the damage in Hawke's Bay this last weekend as our team went up to support and volunteer for one of our customers. But either way, there's plenty of uncertainty. Today, we'd like to talk to you about some of that uncertainty and what you and your business can look to do. Today's session is scheduled to run for 45 minutes, with some flex should we run over time. The first 30 minutes will be a discussion with the panel, leaving time for Q&A at the end. If you've attended a webinar of ours before, you'll know how to register a question for our panel. If this is your first time joining us, there'll be a Q&A running live to the right of your screen. So register your questions as they come to mind, and please indicate the panelist you'd like it directed to. If you'd like a question raised by someone, click on it to increase its rating, and we'll work our way through the highest rated questions first. So let's start off with some introductions. With me, we are lucky enough to have Nick Hale and Emma Heaps. Nick Hale is the director of our Credit Restructuring unit. Nick, that's an interesting title. Tell us a little bit about what you do.
Morena, thanks. Look, I manage a team of relationship managers and analysts who specialise working with businesses who are in financial difficulty. That could be because of COVID, could be a natural disaster, the stage of the business cycle, or any other reason.
Nice, thanks, Nick. Also, we have Emma Heaps. Emma is a Program Manager of Financial Wellbeing. Welcome, Emma. Fantastic to have you here. Tell us a little bit about what you do.
Thanks, Matt. Morena, everyone. Welcome to the session. So I'm Emma. I am the Program Manager for the Financial Wellbeing Program here at Westpac called Managing Your Money. So this program is part of Westpac's social responsibility to give back to our communities and our customers, and I'll touch a little bit more on the program a bit later.
Oh, cool. Great to have you both along to the Smarts event. Nick, as a Director of Credit Restructuring Unit, how do you see your role at Westpac?
Simply to assist our customers who are in difficulty to return to financial viability. Now, every customer is different, but to give a recent example, we had a husband and wife who were small business owners. They had a history, unfortunately, of mental health issues with depression and anxiety. The business had performed reasonably in the past, but it had declined and was continuing to do so. So in order to reduce stress, we corresponded with their accountant. They signed privacy waivers and so on. And the way we ultimately helped them, we provided some additional funding, we capitalised interest, they made some changes to their business, they restructured, exited a non-performing part, and also they subdivided their property, sold a couple of sections off. They retained another one that had their house on it, and they've repaid all debt as a result of that. The business is now actually profitable, it's generating enough cash that they've put a manager in, and they've effectively semi-retired, and they're having a think about whether to keep it or to sell. Now, last I heard, they probably will, but there's no urgency to that, so they're taking their time to decide. But they're both very happy with the outcome.
Yeah, thanks, Nick. That's obviously a really good story, and plenty to do there to get to that outcome. What do you think made this transaction successful?
Yes, it looked very good outcome for everyone. The key was they got their team together, they approached their accountant and us. They had very good information, they understood the cash flows, they knew where the business was good, where it was perhaps struggling, and that's certainly not always the case. They didn't originally want to exit the non-performing parts. They thought they could turn that around. They weren't that keen on selling property as they can increase in value over time, but they looked at the information they had, they realised they had to act, they formed a rough plan, they took some hard decisions, they followed through. Now, obviously, not every outcome is going to be exactly like that one, but we will always try to work with any customer who wants to work with us to attempt to bring the business back to viability.
Yeah, great. And you're right, obviously some don't play out quite like that, but where would we commonly see businesses in this sort of situation go wrong?
So, people who are sort of doing all of the opposite really to that example, a refusal to accept the position, not facing up to the issues or challenges early enough, with a belief that everything will be okay. The she'll be right attitude, it's great for a lot of things, but managing a business that's got challenges isn't one of them. Not having up-to-date information or not having full information, it's amazing the number of times where we get one of the most recent financials and they're very old, or they don't have a cash flow, or something that was important to that business is missing in the information. People sometimes involve their advisors too late. They're scared to tell us bad news. We're through the cycle bankers. We're here to help, but we can only do that if we're involved. So I can't stress this enough. To us early.
Yeah, good insights. Thanks, Nick, and obviously gives us a good indication of what your role is here at Westpac. Emma, tell us a little bit about financial wellbeing.
Yeah, sure. Thanks, Matt. So firstly, financial wellbeing isn't about how much you've got, essentially. It's about making the most of what you have. And it's also just not a one-size-fits-all approach. So in a nutshell, financial wellbeing is a measure of how comfortably you can meet your current commitments and what it means to be in control of your finances. It's also being able to recognize your ability to understand how money works and how to manage it, how money can impact your behavior, your attitude towards money, and also your sense of security and how you cope with a change in an unforeseeable event. Only 1/3 of Kiwis feel financially secure, and 1/4 of Kiwis at some point in their lives struggle with debt. So it's definitely something that we need to be well aware of. Here at Westpac, we believe that there is a strong connection between mental wellbeing and financial wellbeing, with 74% of Kiwis feeling financially insecure or experiencing financial hardship at some point in their lives. So with all the adversity New Zealanders are facing, with all the recent events, the floods, Cyclone Gabriel, that type of thing, it's now more important than ever that we help to build New Zealanders' financial well-being. But firstly, you obviously need to understand what being financially well means to you and your business.
Yeah, thanks, Emma. Those are some sobering facts on the back of that. On the back of that research, what are we actually doing, you and your team doing to help our customers?
Yeah, sure. So we've got a dedicated team within Westpac who look after any customers who may experience vulnerability. So it's important for people who are in troubling situations to come to us early. We cannot stress that enough. Our staff in branch and on the phones are well trained to escalate certain situations to our extra care team, who are then highly skilled in dealing with those customers who require that extra layer of support from the bank. So it's really important to note as well that you don't have to be a vulnerable person categorically to experience vulnerability, or that all types of vulnerability even fall into a category. So we have our staff come to us with customers from all walks of life that are dealing with challenging situations. So this can be from a personal or a business level. We just do ask that you please reach out to us.
Nice. On a business level, can you give us an example of when the extra care team have supported a business customer?
Yeah, sure. So an example of this, we had one of our business managers discover that a client of theirs had a gambling problem, and that was affecting the business cash flow. So that meant that the customer was then risking dipping into their personal pension funds if they kept spending the way that they were. So the Westpac staff member worked with the extra care team to firstly address the situation with the customer, and secondly to work with the customer to better manage their finances with the tools and resources that could be of use. And 5 months later, thankfully, after working with the customer, their behaviour has significantly reduced or improved, so having less strain then on the business. And I think it's really important to note that as people, whether you're a big business customer or not, you should always get a level of extra care if you need it. On top of this as well, as I briefly touched on earlier in my introduction, we have a financial wellbeing program here called Managing Your Money. So that covers topics around spending and budgeting, buying your first home, managing debt, scams and fraud, etc. So they're both offered face-to-face and online. And as a big business ourselves, we all know how important it is to look after our people. And that's where Managing Your Money can really step in and help out. It's free to all of Kiwis in New Zealand. You don't have to be a Westpac customer. So please, I think Matt is going to put in the notes following this to register. So please, if you are interested, get in touch.
Awesome, thanks. Yeah, great service, great offering, and yeah, we'll absolutely follow up with that link to register. So over to you, Nick. There is certainly some stress. I'm seeing it every day in several industries and regions around the country. If I'm a business customer, what should I be watching out for?
Yeah, absolutely. I mean, the early warning signs are often things like finding it hard to generate sales or obtain cash. A requirement for additional liquidity is often one. Individual one-offs are one thing, but if they're more frequent or the amounts are increasing, that could certainly be the sign of an underlying issue. Working capital not being as you would expect, a change in credit terms from your people you deal with, unusual inventory levels, either too high because you can't sell or too low because you can't restock, covenant breaches, customers not paying you is a fairly obvious warning sign, and then any anecdotal industry issues you're seeing.
So what should I start thinking about if I'm sort of starting to see some of those signs in my business?
Start thinking about the outline of the plan. You don't need all of the answers. It would probably change in any event, but you do need a rough strategy. Is, for example, further equity available? Can you sell surplus assets? And if so, how much time is that going to buy you? Is there a realistic pathway back to viability during that period? Can you negotiate amended debt terms with us? Can you change your working capital payments? Is there government support available? The key, though, is not to bury your head in the sand. Talk to your advisors, form a plan. We love talking to accountants. Our business bankers are here to talk, so talk to us, have a plan, and follow through with it.
So maybe I'm seeing some of these signs, maybe I'm not, but I'm clearly watching the news. I'm hearing all of these things. I guess getting prepared is important. How should I be getting prepared? Regardless.
Great question. Again, talk to various advisors. Find ones who are knowledgeable about your business, who challenge you appropriately, and who add value, and engage with them. Ensure you have up-to-date information. Is your MIS good enough? Understand your business. What are its strengths, its weaknesses? What are the critical success factors? What industry challenges, for example, changes in regulation, are you expecting over the short, the medium, and the longer term? Who are your key dependencies from both a customer and a supplier base? And what are your relationships like with them? How are they performing? What's the opportunity from that and the threats? We see during the bottom of the cycle, we see a lot of contagion risk where what were otherwise sound businesses are wiped out because a key customer simply couldn't and didn't pay them. Think about your plan, what it would involve if you got into financial difficulty. Talk to us. Go on our website. There's some great info there on our business base page, and the team's here to help.
There absolutely is. So got my business. Things seem okay, but how could I, what are some tools I could do to actually stress test my business resilience?
Have a think about how you're comparing versus previous years. How are you going versus your business plan? What are your specific pain points? Is everything as you'd expect? For example, if you offer 30-day payment terms to everyone, but your debtor days are sitting at 60, well, something's happened. What is it? Again, and sorry, I know I sound like a... Look at business base, talk to your banker, talk to your accountant, the Chamber of Commerce, any other advisors you've got. For some industries, they or we are going to have some benchmarking data, and have a look at how you compare to that.
Yeah, great tips. Thanks, Nick. Emma, for my personal situation, or I've got a team of staff, what can we do on an individual level to be prepared for tough times? Maybe if you've got some tips for even business owners to talk to their teams about.
Yeah, definitely. So this tough times, right? We're seeing it everywhere, like you've said, Matt. We're seeing it in the news. It's definitely on the horizon, if not already here. So this is even more apparent with recent events as well happening to New Zealanders, affecting businesses as well as people personally. And even so, before these events, we found that 5 out of 6 Kiwis experience some form of financial stress in their lives. So it's now more important than ever to become aware of your own personal situation, as well as the pressure that this might be putting on your staff. So some tips that we can offer are always to put money away for a rainy day to protect yourself from financial stress. So some people call this an emergency fund. However, you can call it whatever you like, whatever aligns with what that emergency funds could be used for. Plan. So if you've got a robust budget that's sticky, you're more likely to be able to face some really financially stressful times without taking too much of a hit. So I know sometimes the word budget can seem a little bit mundane, so call it something likewise with the emergency fund that resonates with you so that you're more likely to stick to it. Another important point is identifying your needs and wants. So it's really important during our financial strain or bordering on a recession environment that we are clear on what a need versus a want is. So this may sound really simple. However, it's really surprising when we are going out to big businesses or our facilitators are, how many people are really unclear on the difference between the two. And obviously that can be different from one person to another, but just bringing that to light and making yourself aware of it will be super helpful. Working hard to remove the dependency on credit in whatever form. So being really wary of those buy now, pay later schemes. We all know how catchy they are, and they're going to sell the dream, especially during that financial stressful time. So making sure that that fits within your budget is key to not getting caught out on the late payment fees or any other charges that may go along with credit cards and that type of thing. Talking to the bank when you're worried or experiencing any type of hardship. I know this message from the three of us has been plugged throughout this whole discussion. However, it's so important to let us know early if you are experiencing any type of financial hardship. So it's much easier for us to stop those small leaks and give you the tools and resources to do so before your situation becomes a sinking ship, for lack of a better term.
Yeah, nice. Thanks, Emma. I'm just trying to think what I can rename my resilience fund to. But on that, how many New Zealanders have a suitable size emergency fund?
Yeah, so it's quite hard for me to comment on the whole of New Zealand, but based on Westpac's resiliency data, which is a whole bunch of data we have that identifies nationally what areas are less resilient than others, we can say that approximately 49% of our customer base would be able to absorb a sudden shock of at least 9 out of the 12 months of the year. Now, this isn't bad. It's not a bad stat. However, it's important to note that each person has different financial needs, right? To the other. Matt and I will have different, Nick and I will have different. However, as a rule of thumb, we recommend that around 3 months of expenses would be considered a solid emergency fund that one person should have available, just to stop yourself from getting into that financial stressful situation.
Yeah, great tips and plenty to think about. And certainly as a business owner, it would be something that, if my staff were struggling, I could see some indications that we could happily have a chat to them about. So thank you. Nick, my business is struggling for a variety of reasons. What are some solutions that the bank could put in place to help support me?
Look, by definition, everything that comes to us is outside what we would normally do. No one wants business failure. We're invested, therefore, in you succeeding. Additional debt that you can't afford is in no one's interest on a long-term basis, but short-term, while you're working plan, certainly maybe the ability to provide working capital support, bridging finance, reduced principal payments, go interest only, depends on what has caused the issue. So look, that's a really long-winded way of saying what we can do and what we will do depends on what's caused the issue and what the plan is to get back on track.
Yeah, so the important thing is to understand the individual situation, have a work through, and for us to be alongside you with that plan. Great. Emma, as a business owner, and probably alluding to a little bit before, my staff are hurting, and yes, an easy fix is we could increase wages, but that's not going to be an option for some of our businesses. What is actually available for the individual for us to be able to help them?
Yeah, definitely. Firstly, the bank, we're here to help. So if you are, or your staff are experiencing any kind of financial hardship, please reach out to us or to your banks. We've got a whole bunch of tools and resources, calculators, that type of thing on the Westpac website that can help people to be more in control of their money. So just getting that visual representation of what a budget could look like, how to pay off my debt, that type of thing can really help. So I'd also strongly recommend using other financial tools that are available on the internet, like Sorted, FinCap. They've got some really interesting calculators like we do, as well as articles just on what's going on, I guess, in the financial world at the moment. And we refer to those a lot in our workshops. They're really interactive and really easy to follow. Research does show that around 46% of employees worry about their finances, and I can only imagine that this stat will grow in the current economic environment. So here at Westpac, as said before, we can offer you and your staff free managing your money workshops. So they can either join one of our public sessions or we can host a workshop just for your staff. So that can be tailored to their needs. We meet with you, see where the pain points are for your staff, and kind of create something that would suit both you as a business as well as them personally. And we really see that value, improving your staff's health and well-being means supporting their financial well-being too. So What we're seeing on the backside of that is that's actually more productive for you as business owners as well, with the average of about 20 hours a month being lost from your employee's point of view to sorting out their own personal finances. So just to give you a bit more of an insight into the program, so we've got 3 6-week programs that sit underneath the Managing Your Money umbrella. So we've got our Money Makes Sense program. So that's for those who are quite new to money management, potentially just got their first jobs, and looking for ways to kind of start using those tools to make their money work for them. We've got our Money Skills program. So that's for people who are managing money day to day, but are looking for ways to embed simple and strong daily habits for a firm financial future. Maybe looking at buying their first home, that type of thing. And then we've got last, our Mastering Your Money program. So that's targeted at those who know how to manage their money day to day, but are looking at ways to kind of taking those next steps to grow their financial future. So in that we speak to investments, large sums in savings, that type of thing. And I think it's important to know that at the end of the day, we as Westpac are wanting to build awareness that we're more than just a transactional bank, and that when times are tough, we really do want to try as best as we can to help and extend that helping hand. And managing your money is a great way for you as business owners, as well as an offering to your staff.
Yeah, thanks, Emma. And just a good reminder now that we do want to leave plenty of time for your questions, because it is one of those topics that we can be as broad as possible, but some of the specific examples will be great to talk to. So Emma, Nick, thank you so much for sharing your insights, wisdom and experience. When you are thinking about questions, do think about the really, really tricky ones for Nick. That would be fantastic. I promised him some hard ones. But without a doubt, the one thing that is key to working through any sort of adversity is the sharing of information, and that's partly of what we're trying to do here. But if I can just sort of hit home a few takeouts, talk to us or your banker early. It's okay not to have all the answers now, but just let us know what you do know. We do have a lot of experience in this, particularly Nick and his team. Get your advisors together. Understand what options are available, keep us updated, and once the dust settles, keep working on your plan and keep communicating that through to us. So thanks, guys, but we might just flick over to some questions. Nick, you've been around a while. What can we learn from previous economic downturns, and how can we use this to prepare for future challenges?
Thanks, Matt. Okay. Look, I think what we learn is that every challenge is different, but the keys are still the same. And those, the keys to getting through are the things we talked about earlier, is to, understand your business, have good advisors, talk to us early, make sure you've got the information there, make sure, as Emma said, get to problems before they become. Little problems are much easier to solve than big problems, and that's what little problems become. So yes, the GFC, the 87 stock market crash, this one are all caused by different reasons, but the solutions are going to be similar.
And I think, if we think of, the Christchurch earthquake, the floods, the cyclone as well, it's being able to see through those events, and again, getting that information around what's happening. Listen to the economists. They'll all have a slightly different view, but building your business around that information, I think's quite key. And that kind of ties into another question that we've got here. Our biggest issue is cash flow, especially because most of our client base are 20th of the month payers. Both my partner and I are engaged in the business. What help is there for us? And Nick, you might want to jump on the back of what I say, but really that's around, if cash flow is an issue, but the business is still going strong, it's around, forecasting that position. So, if it is just delay in terms, then, absolutely probably working capital is the right thing to help. We can look to supply that, or you can look to inject it from other sources as well. But it's around seeing through that trade cycle for you. And if you need some help with that, we're happy to help talk you through that. But also your accountant. I know the Chamber have got some great resources as well to understand that. Anything to add on that one, Nick?
No, I think you've covered that perfectly. Thanks, Matt.
Cool. What should I expect from my accountant/advisor when I approach them with concerns over my business performance?
I would expect them to sit down and help you work through, where the business is, what the numbers mean, what exactly are the pain points, what potential business options could involve. Now, they're not necessarily going to have all of the answers because some of them are going to come down to what is your ability, what is outside equity's ability, what's your appetite to take some steps. But I'd certainly expect them to be doing more than just giving you, here's the numbers, off you go. They should be talking to you about what they mean and what the options could be, and then talking to us and helping us with information and so on.
Yeah, we love working with accountants and advisors. Sometimes there's some language that gets lost in translation, but there's also some accountants are really good at some stuff and some aren't so good at some other stuff. So if you've got a specific problem that is quite specialised, that's when maybe reach out to us or reach out to the wider firm to get some of that specialist advice on it. But just as a general option, yep, they should be working through, again, to that point earlier, is just around that cash flow, what it looks like, what your requirements are as far as working capital, and whether that be via overdraft, how to fund things properly. One of the issues we see as well is that things are funded wrong. For example, you buy a truck and we fund it over 30 years, then all of a sudden you've got to replace it in 5 years, then it's probably not the smartest thing to do. So getting quite disciplined around what those finance requirements are for as well. Just jumping into the questions again. Nick, maybe another question for you. Are you seeing that the current economic environment, especially out of COVID, is tougher than previous economic downturns?
Look, it's certainly, I don't know if I want to say it's tougher than previous economic downturns. It is certainly very tough out there, though. I mean, interest rates have gone from, I know in my case, I had a 2 in front of mine fairly recently, and then a 4, and now a 6. So there's, the speed of rises has certainly been quicker than I can recall in previous downturns. Inflation is very high. There's still some signs that are quite different and individually better than different environments, but there is, I think most people agree now, going to be a downturn or a recession. Whether it's worse or less severe than the last one, who knows? But
are you busier than normal, or are you okay at the moment? Are you busier than normal, or are you okay at the moment in your team?
To pick up, but I mean, businesses, the early warning signs and the early signs of distress are going to be happening with our business bankers. There's certainly more stuff now starting to come through to us, but it hasn't yet. I mean, there'll be a lag there, but I imagine our business bankers, I don't imagine, I know, are getting busier, having conversations about interest coverage not being as good as it used to be, and what are the options as well. We're expecting.
Cool. Thanks, Nick. Just a question here. There's been a lot of pushback from Westpac on lending requests made by landlords to improve the value of rental properties. Even if the property portfolio has plenty of equity to fall back on, why is this the case? Not a property finance expert. In general, though, we do have a set rule of underwriting standards that we tend to overlay to see if things look appropriate. So would probably need to understand the individual circumstance a little bit more on that one as to why Westpac and other banks are potentially being reluctant on that. Could be area, could be earthquake issues, could be cash flow, could be a number of things that are related that we're showing some hesitancy, but we should be telling you why. So if you're not getting clarity as to why we're not doing that, then maybe we should have a bit of a chat about it. So thanks for that question. One for Emma. Do you link back in with companies that have hosted managing your money sessions for their staff to see the impact it's had on their financial well-being after 6 to 12 months? If so, what sort of results have you seen?
Yeah, sure. So the whole measures of success, which was what we like to call it, is quite hard with financial wellbeing. So I guess the main aspect to note with this program is we're not there to create any or advise, give off any financial advice or sell any Westpac products. So there's a real grey area around getting that data on people, especially if they're not a Westpac customer. So what we do, we have a pre and post survey to do with our program. So week 1, they do it, and week 6. And what we see is that real behavioural change, right? So that's why these programs have been designed. It's not just a one and done, it's the 6 weeks. And what we're seeing is those embedment of those tools that we're providing or encouraging people to use. I don't have any kind of firm stats, but I mean, people are coming back to get the program again. Schools come back to us, businesses come back to us. So I guess that's a good stat in itself, right?
It is, yeah. And on the managing your money, we've provided them to big corporates, and we've provided them to really small businesses. And as Emma said before, we can do virtual ones as well. So, great offer. Get your team together and we can have a chat. And there's always, there's some fantastic questions that come out of that. And if we can help a little bit, we absolutely want to. And maybe another one for you, Emma, but what can businesses do to maintain a strong relationship with their customers when times get tough? And maybe Nick as well. Are there any effective communication techniques we can use? I guess, Nick or Emma, have you got an answer for that one? Strong relationships with customers when times get tough. Keep those relationships.
Sorry, Nick, you go. You go, I was just going to say, I think it's keeping those lines of communication open, right? And when people are experiencing any kind of financial stress, that either one or the other party is aware of that. Like we've said before, getting in touch, that communication works across the board, whether it's with us or with your customer base. That's what I would say.
Anything?
Sorry, Nick, you can go.
Yeah, no. Say similar. I think it's about making sure you've got good communication with them. When you say you're going to do something, you actually do it. So certainly don't tell them you're going to pay them on a certain date and then don't. I think it's one of the things to be thinking about perhaps earlier, is how you are keeping those relationships during the good times. If you've always paid on time when things were good, I mean, yes, it's going to be sort of double-edged, that they're going to know that something perhaps has happened because you haven't paid them. But also, if you've got a long period of goodwill built up, they'll be more receptive to sitting down and talking to you, like any other relationship.
Yeah, I also think, we saw it through the start of the COVID lockdowns as well, is that everyone kind of wore a bit of the hurt collectively. So we saw landlords discounting, rent. We saw customers being more generous on terms as well. So it was understanding, I suppose, where your customer was at, your suppliers were at, again, communication and working through that collectively. So as soon as one part falls over, the relationships fall apart pretty quickly. So yeah, again communication there. Nick, do you know if Westpac has someone available to help with expansion advice in any of our teams? I know we do, depending if it'll sit in corporate or business.
I don't is the honest answer, but I mean, talk to your business banker, and he or she will be able to point you in the right direction if we do.
Yeah, again, comes back to scale on that. So in the institutional space we do, in the corporate space we do, and in the business space we will, but it'll be the answers will be very, very different depending on where that lands. So do reach out to us. Emma, how do you put money aside into the rainy day fund? Good name. When the bills keep coming and the money is not there to put aside?
Yeah, and I mean, that comes back to my planning point, right? So you want to make sure that the budget you're setting, if you choose the word budget, is reciprocal of your pay cycle, reciprocal of what you can afford. I'd also really look at exploring that needs versus wants piece. So whether that's going through your bank statement line by line, whether it's sitting down with someone like a financial advisor, and going through ways in which you can manage that better. Unfortunately, we don't have all the answers. We can only kind of provide the high level tools and resources that we have here at Westpac. But I mean, fingers crossed, we make it through this smoothly, and yeah, just getting in touch with your banks, having a managing your money workshop, if that suits you, coming along, getting those tools and resources, and if that still doesn't help, then we can kind of look to those other options following that.
Great. And no, you don't need to be a Westpac customer to access the managing your money
No.
service. So, good to clarify that one up. Here's an interesting question, which we all may try and answer, not being HR specialists, but how can businesses ensure they keep key talent employees during challenging periods? Anyone want to have a go at that one?
I guess I kind of touched on it earlier, in regards to the Managing Your Money program. This is a free financial wellbeing program for your staff, no cost to the business, no cost to the participants. And I think it's really peeling it back a bit and looking at, if you were in their position, what would you need as an employee from your employer to get you through these hard times? Because what you'll find, I guess, all employees have different benefits in which they prefer, and some may not. So it's having those conversations. Communication seems to be coming up a lot in this webinar. So sitting that person down, if you notice them dropping off or staff satisfaction isn't that great, sitting your people down, having that chat and seeing what they need, and offering that assistance if you can.
Yeah, we've talked about managing your money a lot, but I know there are a lot of other free services available as well. So I guess when times are financially difficult, because it's not easy just to throw money at problems at the moment, then investing the time and working out what is actually out there. And again, the chamber is as well as a really good place to start with some of those resources. But cannot emphasize enough just that communication piece, which is a theme all the way through that. Yeah, what are the main benefits offered from the extra care services compared to a business seeking external financial advice that we can speak to?
So the extra care team, they're not there to provide any financial advice. It's more to get people through those tough times. So we act as, I guess, the middleman between branch or customer service on the phone staff as well as the customer. So we go that extra mile. For example, we get someone experiencing some type of vulnerability. We then take that over. So we call them, we create that rapport with the customer, come up with a solution. Obviously, each vulnerability or each issue comes with its time period in terms of when that solution is reached. But we just act as that support system for that person, opposed to them having to either call up or come into branch and get a different person each time. It's nice for those people that are experiencing any type of vulnerability that they've got that one person at their bank they know they can go to, and have kind of created that relationship with as well.
Awesome. Thanks, Emma. And just probably to start, I guess, closing really is just to emphasize some of the key messages again that kind of came through. So, we really do want to help. That if your business is going through some financial hardship at a variety of stages. So, we've got Nick, whose specialist team is there for when a lot of the normal options have just run out. So they see a lot of different things, and they've got a lot of experience as well. So all hope's not lost, right? But the message here is we really don't want to be the ambulance at the bottom of the cliff. So we want to be able to talk to you earlier. We want to preserve equity. We want to, not have you to make some of those really tough decisions, as to Nick's earlier example, although that worked out well. They are some very emotive-driven decisions. So do reach out. Do reach out to your advisors. Do reach out to anyone that you trust, and communicate. And hopefully, Emma's shared some of the cool stuff that we're doing out in the communities as well. That we do want to help and be a little bit more proactive. So. So thanks for the questions. That's all we have time for. But just to let you know, a recording of this webinar will be shared along with the links to the helpful resources that we've discussed in this session. There will be a survey poll to the right of your screen. So please give us feedback on today's webinar, as we'd really appreciate it. Thank you everyone for attending. Thank you, Nick. Thank you, Emma. And we look forward to seeing you at the next Westpac Smarts event.